everyone, we are Group 3 and today we will analyze the cash flow statement of Amplifon of 2022. The analysis of the cash flow statement gives us the opportunity to look at the company's financial management and its ability to manage its cash flow in the three areas which are operating, investing and financing. The operating management is a crucial component of the cash flow statement as it allows us to assess the company's ability to generate cash from its core activities. The adjustments are also made in this section for non-cash items such as, for example, depreciation and amortization, but also provisions and gains or losses on disposals. In the investing area, we see how the company manages its expansion strategy. In fact, items related to the purchase of fixed assets and business units are shown, but also results related to the disposal of fixed assets. The financing area reflects results related to the company's financing activities, but also movements related to equity and dividends. Specifically, in the operating area, we begin with the net profit from previous year and continue with the adjustment of non-monetary items. Regarding the depreciation of the fiscal year 2022, it amounts to approximately 240 million, of which 80 million for intangible assets, 51 million for tangible assets and 180 million for lease rights, with an increase compared to the comparative period of approximately 20 million. This variation is primarily to the increase in tangible assets and lease rights. At the end of this part, proceeding to the analysis of working capital, we obtain a cash flow of over 500 million. Regarding the analysis of working capital, we observe an increase in inventories, indicated a change of inventory management that negatively impact cash flows, and also highlighted by the days of inventory on hand analyzed in the previous work. Additionally, there is an increase in trade receivables attributed to the increased sales rather than an increase in time required to collect the receivables, as confirmed by unchanged days sales outstanding. Regarding trade payables, these positively impact our cash flow as an increase in payables reflects lower cash outflow. Finally, to conclude the analysis of working capital, we analyze the variation in other payables and receivables, which negatively impact cash flow due to the significant increase in other payables. In conclusion, the analysis of the operating area, we adjust for dividend received, interest received or paid, and taxes paid, resulting in a nearly 500 million generated from the operational area. In the investing area, we initially find variation due to the purchase of both tangible and intangible fixed assets, followed by the proceeds from sales of fixed assets. The sum of these three items gives us the cash flow absorbed by operational investment activities amounting to 106 million. Subsequently, we analyze the variations due to the acquisition made during the year. In fact, the investment area witnesses significant outflows during the fiscal year 2022. The group continued its strategy of balancing internal growth and external one by acquiring 196 retail outlets for a total net investment of 84,572,000, which, with a decrease in acquisition-related debts, absorbed a total of 87 million. In conclusion, for the investment area, we can observe how it absorbed nearly 200 million in cash. The financing area provides an overview of financial balance management and shareholder remuneration. The first items analyzed related to the decrease in financial debt by 128 million, with a significant absorption of over 100 million attributed solely to the payment of long-term debts, followed by a slight increase in financial receivables. Subsequently, there is a payment in the capital share of leasing debts absorbing over 107 million, followed by the dividend distribution and share buybacks totaling over 100 million outflow. In total, the financing area used over 350 million. In conclusion, the three areas absorb a total of almost 89 million, which subtracted from the 268 million in liquid assets at the beginning of the year, give us the cash available at the end of the year, namely 179 million.